Hello, 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 everyone. This is Bud Evans, host of the Aim High podcast, here with Coach Phil Tudor from the South Jersey Real Estate Investment Network. How is everyone doing today? It is a pleasure to be here as always. Phil, how's it going, buddy? What do you got going on today?
It's going, man. Saturdays are admin day for me. I always feel like it's like I catch up, and get that administrative stuff knocked out. But Saturdays are also becoming our new staple here, right?
Yeah,
Just
buddy.
adding value back into the community. And I'm getting super excited getting into this rhythm with all of you, just dropping free knowledge and adding value, hopefully, to your lives and your businesses. So, yeah, I'm super stoked.
Absolutely, man. Hey, Phil, just a reminder. Hey, what do we have coming up again in January?
January. What? Oh, that's right. Boardwalk Powerhouse. Yeah, you don't want to miss that. Tell us a little bit about it, bud.
You got it, man. Okay, so our overarching theme for the Boardwalk Powerhouse is going to be rental properties from A to Z. We are going to have 6 high quality individuals in different aspects of the real estate industry, all related to rental properties. We're going to have Brian Fine from Coast to Coast Network and Coast to Coast Property Management talking to us about the 2023 economic outlook. I'll be taking you guys through the BRRRR strategy and how to self-manage your own properties. Coach Phil, what are you doing? What are you talking
I'm going
about,
to be
buddy?
talking about the true investment, real estate investing relationships. It's added a lot of value to me. I sit and I look back on it and I realize that one of the truest investments I've learned to make is in other people and relationships. So I'm super excited to show you the connection between rental investment properties and those relationships.
Absolutely, man. And hey, guys, your network is your net worth. I don't know how many times we say that. Coach Phil is spot on with that development of those relationships, those networks, and how it can make you successful. Guys, we also have some other high-powered speakers. The captain himself, 𝗧𝗿𝗏𝗏, who's going to be talking about creative financing and how to get your real estate investments for free. We'll have Jen Josie. Sarah is going to be on there talking about midterm rentals. We're going to have some short-term rental discussions as well. Guys, it's all coming to you live. It's going to primarily, if you are a Zoom, if you're going to Zoom in, it is going to be on Saturday, the 14th of January. We are going to be meeting up down in Atlantic City from on the 13th through the 15th. If you are attending in person, it will be held. Well, we'll discuss those details a little bit later on. We'll make sure that that's public knowledge. If you go to Eventbrite, we'll make sure that that link is available for you in the post and in the South J. Rian homepage on Facebook. But guys, let's break it down. What are we going to talk about today, Phil? Money. Everybody loves money,
Yeah,
right? Yeah, buddy.
absolutely.
All right, man. So we're going to talk about, guys, we're going to talk about your construction project management. How do you account for it? We're going to talk about profit first accounting and that type of methodology of accounting and how to actually manage your books using that. We're going to give you some tips and tricks for how to track your expenses. And guys, I use a couple of different types of software. We have a couple of different affiliations with different organizations who deal with our bookkeeping and our accounting processes. And Coach Phil, obviously, he is a contractor extraordinaire. We're going to talk about how do you pay them? How do you make sure that you don't get jacked up by them? Okay. And I know we have some contractors in the audience, guys. So feel free to chime in on Facebook, get into that chat and let us know you're here. Hit us with your favorite emoji and let us see what you're doing. All right. Yo,
Yeah.
Phil, let's start it off, buddy. That construction project accounting. Let's talk about your accounting methods starting off, man. Like when we first start with, we know that we have our deal analyzer. And guys, if you are pro members of South Jersey Rian, you guys know that you have all of this stuff. You have your deal analyzer, you have your rehab estimator, all that stuff is available for you in the library. If you're not, guys, check it out. Go over to sjrian.com and make sure that you click that link and subscribe if you'd like to. If not, stand here and get some free content, guys. You can do all this stuff with an Excel spreadsheet if you really need to. But you know what I do, Phil? I have this, man. I have the way that I run my systems is I like to keep everything separated. Hey, what's up? Coach Yasser's on the call. Yo, buddy. How you doing, man? What's up, guys? All right, here we go. So I separate all of my projects and I have each one has its own credit card. I don't know if that's a good thing or a bad thing, but it does give me the opportunity to pick up and go away for a month to Greece with all the points that we get, right? It's kind of like a discount. You can use it as that. You can use the points that you get when you make charges and whatnot and use that to, as a discount on your credit card, cash back and whatnot if you use those points well. We also collect all of our invoices and drop them into QuickBooks Online. Guys, it's another little tip or trick. And we use something called Dext, which is an electronic organization, file organization thing. And then each project has its own spreadsheet as well. So we kind of use that 3-tier system so that we can track all our expenses. But what are you doing with, how do you track your guys?
So yeah, so I definitely have different sub accounts, through my business checking, like you can go and you usually can add up to like, for my bank, 10 free accounts, sub accounts, right? And they all get titled specifically to my projects. This way my funds are not commingled, right? So we'll get a little bit into that in a little bit too, where we talk about profit first, right? And how you have different funds. So I might have my operating expense account. Let's say I do closing, closing the funds can get sent right into my operating expense account and then transferred to these other accounts. But whatever way it happens, those funds have to ultimately go into another account because I have definitely learned to understand the value of not commingling those funds, right? It helps me to foresee if I'm heading in a direction of over budget, if I'm not able to update my tracking spreadsheets, it just is a really good visual aid. But for sure, I'm right on line with you. QuickBooks is used. I have a bookkeeper that knows the name of the projects and does my chart of accounts with those things. And all those bank accounts are linked into QuickBooks for it to easily work without me babysitting that. It's just a very streamlined process. The final thing that I do, as far as talking about money on projects specifically, is I use an electronic check payment system.
Yeah.
I love it. I taught before. I love the saying was, "Don't become a walking ATM," right? And it's great. You got to be careful about it. And we can talk a little more in detail with that if you want or not. But you do got to set some parameters up. It's not just a loose, open checkbook process, but it definitely with technology, using it to your advantage. My contractors love it. They don't got to chase me down for a check. Send me some pictures. If I can easily justify by the pictures that they're being honest, then good. I'll do my walkthrough when I get a moment to, but I won't hold their money in their cash flow up because I know cash flow, if I stay on top of it, helps my timeline stay better too, right? It keeps them moving. So yeah.
Yeah, man. And I know we're going to get into the cost construction methodology, but when we're doing the job costing initially, everything has to be accounted for. You like, I don't know about you, Phil, but I walk the job first, do my own rehab estimate, and then I'll walk the job second with my general contractor so that we're on the same page. I've recently moved over to paying for my own materials. I don't know if that's a good practice or a bad practice, but it seems to work for us. It helps in our estimation so that I can automatically, and we've got it down with our key performance indicators. We know that our average labor costs are about 60% of the project right now. So when we're buying materials, like I said, using that specific credit card or that specific account at a Lowe's or a Home Depot or wherever you're going for your stuff, if it's a small box store. So we keep track of everything. Keeping those material costs low. But as far as the labor costs, we work on a draw system, and that draw system allows us to track that performance from our contractor. So as we're progressing, we can track it. I do a maximum of 8 draws on every job. So yeah, man. Yeah, Cap, absolutely. Guys, Captain 𝗧𝗿𝗃 on the line with us, providing information and knowledge nuggets as always. Labor only is the only way to do rehabs truly. If you're allowing them or anyone else to buy your materials for you, you can guarantee, I don't want to say everyone, but I will say probably it's 95% of the people that will do business with you will mark it up. They will mark it up and take a little bit of extra cash out of your pocket when you're doing your flips or your rentals or whatever, you're turning your rentals. So Phil, how do you measure those costs in the jobs when you're doing your job costing?
On the front end?
Yeah, on the front end first, and then we'll go through the whole process.
So definitely. I mean, look, I've always taught that it's like kind of like a large picture to a dialed in picture as you're going through the bidding or the offer process, right? So I'll be putting my offers out there, and I'll have my general construction budget based on what I see in my walkthrough. I use RealFlow to give me some estimating costing. I've also used a combination of what I've learned from the experiences of my existing contractors to update those default numbers in there, as well as I'll use a site called homewise.com, HOMEWYSE.com, and I'll check a pulse of the market out there, keeping in mind those are retail numbers. So I try to reduce them by 25% is my goal, to keep my margins out there. Homewise, HOMEWYSE .com. So that's the front end process, right? So using Real Flow is how I have my default numbers. I've updated them, and then it's just line items, and I love it because it's like a checklist for me, right? I'll walk through my project, and I'm checking every single area of that property, and it makes me not miss something, right? But I like what you said earlier. I'm the same way. It's my walkthrough first initially myself. I put together a healthy budget on that with a contingency. I put the house under contract. When I win that under contract, all hands on deck, I'm engaging contractors immediately, right?
Yeah.
And I'm out there weeks in advance before closing, talking with the contractors to verify these numbers, right? And then that's where the rubber really meets the road, and the negotiations will begin to happen, and the confirmations. Because, heck, I mean, I don't know if you do it differently, but I look at the offer and contract process as there is the reason why you have a due diligence period is to protect you for that stuff,
Yeah.
and that's where I exercise that within the 10 or 14 day due diligence period of my contract is where I will confirm these numbers to make sure it's a good project or not to move forward.
Yeah.
But yeah,
Now, and listen, we're going to talk about this. There are people who are out there that are high pressure tactic salespeople. When we're looking at these things, whether it's I don't want to say an agent, but let's just talk about the wholesalers, right? Because we deal with a lot of wholesalers. That's
Mhm.
kind of the nature of our business. Some of us do that ourselves. We, find deals. We are overloaded with our deals, and we'll offload those. But running into a high pressure, how long does it take you generally to do your due diligence? And can you do it in 48 hours?
um, that's a complex question. Feels
Yeah.
loaded. Because some things, yes. Here's what I do is that initially, what I even coach a lot on is that you want to look at the big ticket items, right? Not get tied up in the minutia details, like linear footage of trim, whatever. I can absorb those little hits within my contingency, but roofs, HVAC systems, plumbing systems, expensive mechanical systems, structural stuff is where I really laser focus in on. And what I'm talking about is that before I even, engage projects, what I've done is I have created relationships through contacting services out there that can provide me inspections, right? And I work those relationships to either say, hey, what is your charge in advance for you to do this A type of inspection on my property, right? And can you turn it over within 10 to 14 days for me, a report of some sort, right?
Mhm.
Or a price, even a bid. So I'm already pre-working out those scenarios so to make sure I can hit the ground and just pick up the phone and engage that contractor or that inspection. And I'll tell you what, most of them do it for free
Yeah.
because they know that they're going to get the work from me, right? But can I turn it over in 48 hours? Usually it's a little bit longer than that.
Yeah.
I'm usually seeing about 7 days, 7 to 10 days is where I can really get some concrete feedback, from the general contractors if I'm doing that, going that route, or the individual subs, or if I'm doing inspections, like if I have to get a hydraulic load test on a septic system,
Yeah.
that takes me a little bit longer. So that's why I say it depends on the context of what the project is requesting of me.
Yeah, man. Septic systems drive me crazy, buddy. I have a quick flip project right now that it took 3 months to go from the beginning to the end just on the septic and well systems.
Oh yeah.
So I feel your pain on the cost of the hydraulic pressure. Yeah, absolutely. It's insane. Now, if you pre-vet your contractors, does that help you get them in and out a little quicker?
Absolutely. And this last one that I'm on, if you're following me on Facebook, my personal profile, Phil Tudor, or I share it into the SJ Rian group here as well, all my content. You'll see I was talking about um, what was it? Proactive systems creates predictable results, right? And that's kind of what you're talking about. I even did the vetting for this latest contractor in that hiring process, right?
Yeah.
Expressing to him my how I conduct business, showing him the contracts and the payment schedules, telling him how this is going to go, planting the seeds and setting the expectations early on. So absolutely, that vetting process is crucial to be able to hit the ground run. So you're not distracted.
Mhm.
Can you do two birds with one stone? Yeah, I was able to pull it off. And I think that's more on the side of being fortunate than it was super proactive. But all my other contractors, they're onboarded and they know the expectations I have for the
Yeah.
relationship. So it allows me to streamline and move through it. It's a beautiful thing, right? When you can get to a point, I don't know if you experience this, of where you have repeat work for your contractors that know your expectations in advance. And it's just like, hey, here's the budget for this project. Does that work for you?
Yeah.
You know, and here's the scope of work,
Yeah.
right? It's just so much more streamlined than going through the back and forth and bidding and negotiations, you know. So yeah, I highly encourage do that in advance, and you'll be saving a ton of time and a ton of stress, you know, because you're right. You know, you hit on one of the points was, can I do that in 48 hours during the due diligence period, right? If you
Right.
don't do your vetting in advance, you're going to severely hurt that timeline to vet the deal now, right? Because now you're vetting your contractor and your deal at the same time.
Right.
Yeah.
Right.
So.
And when you develop those, Phil, we're going back to relationships, right? When you've
Mhm.
pre-vetted them, you've done a couple of jobs together, you've worked together, you start to understand each other's expectations. You can walk into a building in some cases and go, hey man, labor's going to be about 25,000 on this. You good? Right. And
Mhm.
then, you know, exactly. And then you just kind of walk through from there and backtrack. Hey man, we got this, we got this, we got this, we got this based on our previous experience. This is what I'm looking at. We're seeing about 25,000 in labor and probably about 10, no, it'd be about 17, 16, $15,000 somewhere in there on materials cost. And
Mhm.
if you have that kind of relationship and you guys can start firing on all cylinders, it makes things go a lot quicker. And speaking of that, hey, I'm going to give you this. How exactly do you pay your contractors? Do you have a set schedule? Do you how do you
Yes.
break that down?
So, you know, the previous step, what you're talking about is basically I have a preliminary walkthrough meeting with that budget, right? I'm not scared to share my budget necessarily. You know, I know it's like negotiations, whoever says the number first loses. I get that, you know, and you got to use that art within your conversation. But if
Yeah.
you have a trusting relationship with a vetted contractor, you're not going to have to worry too much about that. But that scope of work then gets flushed out, right? I have to have my scope of work done before I create my payment schedule to answer your
Yeah.
question, right?
Yep.
And my payment schedule has milestones and benchmarks that reflect that scope of work, right? To keep, you know, I don't know if there's a better way to say it, but the carrot dangling in front of the contractor to keep them
Mhm.
motivated, right? To keep the cash flow well on the project, keep the timeline on point. It's a big staple, but you know, absolutely, I use a combination of a payment schedule. I never usually have more than 10 payments across the project, no matter
Yep.
how big it is. And then that's all signed by contracts and everything like that agreed upon in advance. And I have an electronic check payment system that I use.
Mhm.
Like I said, so
Awesome.
that combination is how I do that.
Awesome. Yeah, we usually break it down where we have our exterior stuff, demo, roof, windows, you know, if we're putting on siding, things that make the inside secure so that when we start doing the inside stuff, we're not going to get rained on or snowed on or anything like that. We usually, you know, front load all that stuff. But yeah, we use a similar system in draw and well, it's the way our money lenders also work. So we can pull those things and we try to keep it right below that 10 mark as well.
Right.
8 plus a punch list at the
Yeah,
end.
final punch list. I mean, you keep
Yeah.
your 10 to 20% on the back end.
Yep.
That's their usually their, you know, majority of their profits for the job, you know, so it keeps them moving well through it. But I would say that one of the things that I do is like, especially on this new if you're like I said, you're following me live on my new project 1114 Iowa Ave. This
Yep.
is a new contractor, and what I do is I test him on his knowledge of construction. I know typical order of construction based upon my experience, but I will put a note on my payment schedules that you can do these items in any order. So I like kind of see if he's competent, right? And I know like what I want is a contractor I don't have to babysit, you know, is what I'm
Yeah.
getting at. So this is a testing phase, you know. I will jump in and start to get the train back on the rails if it's going crazy, you know, for him and guide him and direct him. But I'm using that to kind of like gauge the competence of the contractor, the payment schedule as well. You know, because I specifically kind of give him like this quote unquote freedom, like, hey, you can do these payments, you know, these milestones, benchmarks in any order you wish. I'm not holding you to it, and see how he handles it.
Yeah.
But yeah.
Yeah, man. Now let's talk about the type of contracts that you use with your contractor. And I'm going to say a bad word here. It's a bad word. So, time and materials contracts, guys, time and materials contracts. Phil, have you ever considered paying a time and materials contract?
I have in the past. Yeah, it depends, you know, now, no. I'm labor only. That's my main approach, you
Yeah.
know, but that is determined by bandwidth, right? If you know what I
Right.
mean. How much is on my plate and what I can handle,
Hmm.
because then it does give a layer of responsibility on my plate to make sure materials are coordinated. But I'll drop you a great nugget, everyone. We mentioned earlier about tracking purchases, right?
Yep.
Not only can I track my purchases by putting my contractors through Home Depot with my Pro Extra account, I also
Yep.
get a 1% kickback If you don't know about that, talk with your pro account services manager and ask how you can get a 1% kickback on your annual purchases, right? But I can create a system where now the contractor can go there on his own freedom, pick out the materials needed, and then call me for payment, and that's it. So that's even in a labor only bid, like, so mind you, I could be driving to another project and I'm just taking a phone call, reading off my credit card number, you know?
Yeah.
So obviously you need to stay on top of that tracking in that scenario though too. We want to make sure you're not buying tools on your account, or extra
Yeah.
stuff for the project. So you got to be able to be savvy to control that. But to go back to your question, it depends on the current amount of work I have, right? In the past, when I was running 10 simultaneous projects at the same time while my private, retail construction company, 4 or 5 projects simultaneously, I didn't have the time to deal with all that material moving and babysitting. So I would prefer to have a labor and material bid at those times. But mind you, I had to make sure in my budgets I can handle that markup and that margin on the materials that they should fairly get.
Yeah. Yeah, man. We've gone to the point where the only time that we'll use a time and materials contract is a maintenance call on one of our properties. And it in our lease, we have the first $150 depending on the situation. If it's our issue, we pay the 150. For example, let's say you have a long-haired tenant, okay, and that he or she continuously has drain problems.
Mhm.
So and then they call about the pipe and the overflowing sink. Okay, listen, you got to keep your hair out of the drain, right? So it's going to cost me $50 an hour to send my plumber out there to take off the P tube and clean out your junk and then put it back on. It's going to cost me at least $50. That's getting a bill back to the tenant, right?
Yeah.
That's the only time we do a time and materials.
Yeah.
The only time through pretty much.
I'm sorry, I
whatever.
misunderstood you a little bit. I was actually thinking of labor material bidding processes.
Oh no,
I
yeah,
I never do it. What is it? T&L or whatever, or time and labor. I never do that. I will do a version of that in my negotiations, though. Right? Let's say a
yeah,
change order comes up. I'm like, and they'll be like, "Well, I don't know how much to charge you, Phil." I'm like, "All right, well, how much time do you think it's going to take you?" "All right, I think it's going to take about this time." "Okay, well, what's that worth to you then?" And then I just make that a contract. I mean, it
yeah,
then becomes a line item in itself. I'm still achieving, a solid number. As what you're, trying to refer to is because you can control that more, right?
yeah.
I can't control an open checkbook, in a time and labor billing system. I definitely do not advise that on flips.
Yeah. So we're all pretty much in agreement here that, we have fixed price contracts, primarily labor only. We're taking care of the
Mhm.
materials. We've got to make sure that all that stuff is squared away. So we're at fixed price contracting, right?
Mhm.
But let's talk about it. You brought it up, Phil, and it's a very important thing. Change orders, change order, change order, change order. If I go into a flip or a rental property and start changing my mind on items and materials, and let's say I want to put in a stall shower in a closet instead of, and that wasn't in the original budget, how do you have your contractor give you a change order?
So the main thing that I try to focus on is when I'm signing contract is I
Mhm.
I read them their contract. Like I always share a lot with my students. Is that did you read the contract when you bought your last car? Did you read all the fine print? Probably not. You just looked at the
Yeah.
monthly payment, right, and you signed the dotted line, right? Well, I don't do that approach with my contractors. I read through
Mhm.
my the topics, the points that I feel like I don't do everything, read it through everything. I give them a copy ultimately, but the points that I know are important that will always get glazed over.
Yeah.
And one of them is change orders, right? And I tell them my policy. They need to understand my policy in advance, and that's in my scope of work, and it's in my contract with them that I reiterate twice before we even start work. Is change orders have to be approved in advance. You
Right.
cannot do them prior to discussing it with me, and then send me a bill. I will not pay it if that's what you do. So I'm very clear up front. I'll play out the scenario for them and tell them this is how we conduct business. And this is why we conduct business. Dale Carnegie is The Art of Influence, right? How
Yeah.
to win friends and influence people is explain to them why. What's the value of them doing that? For one, I'm going to make sure I have funds allocated in advance for them. Two is I don't have an exorbitant, unlimited amount of funds, a money tree in my backyard on these projects, so I have to balance all that out. And three, sometimes I can be creative in helping them think about how they handle that change order too. So it's ultimately comes down to it has to be a communication. And then there's a change order form that should be filled out. We should be documenting that and both signing that.
Absolutely.
Yeah.
The other thing that I do is I look for an email specifically with that change order and then I get a red receipt. Okay. So when I sign it and send it back, I can make sure that they have received it. They have read it. I get that red receipt. I log that in addition to the invoice itself in its own folder for each project. And then I'll upload that invoice directly to QBO Online or QuickBooks Online, or we use Dext. Okay. Which is part of the process that we used within our Profit First accounting system is, that Dext system. So, talking about the how we pay contractors, how we deal with all of these expenses each time we get into a new labor or situation with a new construction, a build, rental, flip, whatever it might be. We use specific types of accounting methodology. Phil, I know you're just jumping into this now with Profit First accounting. So I'm going to give a plug. 𝗦𝘆𝘀𝗁𝗁 wrote a book called Profit First. Transform your business from a cash-eating monster to a money-making machine. I'm not looking down. I'm actually looking at the book right here. I keep it on my desk. I've read it several times, and I actually have a coach who is walking me through that process right now. But Phil, I know you just jumped into this, but can you do me a favor? Give me a quick breakdown of what that is before we actually drive into this a little bit farther.
Sure. Yeah. I've read the book. I've done some hybrid implementation into my different businesses, but it's realizing profits first, right? So that you can know live time when an issue is going to be coming. Traditional accounting will say, expenses, or profits or collections minus expenses is what you're left over with. And you typically don't know that till the end of the year when you're sitting with your CPA,
Right.
right? And that's a
Yeah.
bad spot to be in because you could be losing money. I'll peel back. Let me peel back the curtain a little bit about Phil, right? My construction company. Year one in construction, I blew up. I went from a handful of employees to 16 employees. I did $1.2 million in gross sales. Sounds great, right? But I lost $300,000.
Yeah.
And I didn't realize I lost the $300,000 until I had a time to sit down at the end of the year and look at all my projects and the shoe dropped and the music stopped, right?
Yeah.
So I did exactly what Profit First tries to teach you, right? So since then, I've implemented tax accounts, making sure that sales tax that's collected is automatically removed and put on a different account. I have my operating expense account separate from different large project accounts as well now. So like I said, I have a hybrid version. I'm not completely a full Profit First accounting system, but it has helped tremendously because it's just a quick visual aid for me. But how many of us just go to our bank account apps and open that to make financial decisions, right? We look at what's in the account, make a financial decision. Yeah, you might have a handful of those bills coming up in your mind that you're kind of like quick calculating. Oh, I got 2,000 here coming up, 500 here coming up. So I actually have this much, right? That's exactly what Profit First does, but in a very methodical and organized fashion, So yeah.
Yeah. And here's the deal, man. So, if you're if you're a Dave Ramsey fan, he talks about paying yourself first. If you have ever read the book, The Richest Man in Babylon, there's a line, one of the rules that is fatten thy purse, which is essentially take 10% to yourself right off the bat. Profit First accounting, guys, it flips the scripts on the way that we do our books. Provides you with the opportunity to see trend analysis before it actually takes place. And you're ensuring that at the end of the year, you have something in your pocket as opposed to, so I did the same thing, man. My first year, it was like, I'm killing it, dude. I'm killing it. Wait, what do you mean I lost 136,000? Right? Yeah, no, it's not a great
Not
thing.
fun.
Right? Yeah. So we're paying ourselves first. So in using this system, you can look at that trend analysis. And if you're using QBO, QuickBooks Online, you can click a setting and have it show how you're doing. And if you're going the opposite direction, it will give you hey, you're going to go broke on this date view, especially when you're looking at that Profit First accounting methodology. And that you're making money, right? I'm not going to go through the table of contents on the book, but we very, very easily could. And it gives, so the basic breakdown is this. If you're not seeing the profit, if you're trending in the wrong direction, it gives you a no kidding biweekly. I do it on the 1st and 15th. I'll run through all of my income, check it out, put it through my spreadsheet that I'm provided by this company that I use. We don't have an affiliate yet, so stand by for that one. Once that happens, guys, we'll be presenting you because we're looking at different ways to bring you guys some form of, we want to make it free for you guys, but we want to make sure that you're getting high quality information. Okay. So I'm using a company right now that's doing my bookkeeping. I'm also getting coaching from them on how Profit First works. I have 8 companies that we're running, including a hair salon, right? So it's real estate, hair salon out in the left-hand side. And it's like, oh my goodness. But we use that Profit First accounting methodology. On the 1st and the 15th of every month, I sit down and we go through these spreadsheets, making sure that the first thing that comes out is the percentage of profit that we have predetermined already. We pay our taxes that way. We pull out for taxes. I'm not saying, guys, this is not part of, like, taxes are usually accounted for in operating expenses. That's still the same thing. This is a whoopsies account, right? Your tax account is basically an account for you underestimated your taxes for the quarter or for the year, depending on how you're paying it. Okay. So that's what we're talking about with that. It gives you that opportunity on the 1st and 15th of every month to make sure that you are profitable, essentially, right? And you know exactly where your money's going. You can see your money flow.
Yeah,
So,
and you can make adjustments on the fly, right? That's the point. So, bi-monthly, you're having this ability to, like, all right, oh crap, let's make an adjustment now, if possible, right? Like, maybe you're overextending yourself on a project and you didn't realize it by the finishes you're picking, right? I know that's a big one that, overspending on rehabs is a huge factor in why I don't want to say real estate investors lose money, but don't make as much as they should, right? And I constantly will be, teaching newer upcoming investors that, hey, check with your realtor, check the comps. Is it necessary to go down that path, right? But if you don't have that discipline in your finances and where you're trending, you could easily be making those poor decisions throughout the project and dying by 1,000 cuts, honestly.
Yeah, exactly. And
So,
you don't even know what's happening until it's already too late, right? So,
yeah.
So we started out, Phil, correct me if I'm wrong. I'm just going to go on. We started out with 4 accounts. We started with a profit account, because that's important, right? An operating expense account, a tax account. And what's the 4th one again?
Oh, you're going to stump me
Owner's
on this
pay?
one.
Owner's pay.
Oh yeah, distribution.
Distributions. Right. So those 4 accounts give you the opportunity to make a determination of which way your money's going to go, which way your money's going to flow, and how much. Remember, when we talked about the promo for this, we talked about how do you keep your money? You keep your money by paying yourself first, setting that money aside. All right. All of your other operating expenses should pretty much be predetermined, and you're going to be able to see very quickly when you're taking out that profit monthly based on that flip or whatever it is, the rentals, if you're doing that. But in a flip, if your operating expenses are calculated at this percentage and you're taking out the 2%, 3% per month that you're expecting to come out at the back end of this big flip, your OPEX account, if it starts to go down and dwindle and you're not getting another draw to fill it, figure something out, because you're doing it wrong. Okay. And that's
Right,
what
exactly. It should be setting off red flags and say, where do I need to make my adjustments? And I would say, I know if nobody's ever looked at the Profit First book, you might seem a little lost right now what we're talking about. Just get the book. There's a sheet that they help you to calculate these percentages that Bud's referencing of how to do it. It's a very good investment to understand this. And I saw somebody earlier posting saying traditional CPAs don't agree with Profit First, but who cares about them? And I'll back you up on that. You're absolutely right. Profit First does have what's the bookkeeping service, Bud?
Can we
They're
say
affiliated with them, right? Yeah.
Yeah, Beyond Your Books.
Yeah. I think that's who they promote, right?
I'm sorry, the Beyond Your Books. Michael Michalowicz owns Beyond Your Books.
Okay, right. That's what I'm getting at. Yeah.
Yeah.
So, because your CPAs and bookkeepers are not going to be used to this. Traditional accounting, 99% of the traditional accounting out there is the adverse.
Yeah.
Track expenses, track collections, and see what you're left with.
Right. But let me tell you what my accountant does love. Okay. My accountant loves the fact that my bookkeeping service puts all of this stuff in a quick spreadsheet, sends everything to him quarterly. And he's to the point now where, and I'm going to throw a plug out, guys, if you're in South Jersey, he's not an estate planning guy. He's not but he's a great accountant. His name is Dave Torres. He's in Palmyra. But I send him this stuff. He gets the spreadsheets, the reports right off the bat, and bang. No kidding. The last time we did our taxes, it was 20 minutes per report. It's that fast. Okay. You want to talk about something that accountants do appreciate is you get in, you get out, you're done. They don't have to worry about you for another quarter, and they charge you for your taxes. Done. Right.
Yeah.
So they love that stuff.
And you'll love it when your time bill is down on your accountant too.
Exactly. Right. So now let's talk about because we're talking about, we've spoken about how do we do our contracts. We talked about the profit first accounting methodology. Now we're going to talk about how do you track your expenses during the actual build. Because look, couple of things that the tracking does for you is first, staying on budget, man. Right. One of the most important things you could possibly do when you have a budget, you stick with it. Second is you're going to be able to provide accurate billing information to not only yourself, but when your contractors come back to you and they have questions or concerns or something like that about, hey, how much have we spent so far? No kidding, right? Because Phil, you'll attest to this, right? How many contractors have you worked with that they'll go buy something from Lowe's, you've made the call, and you're getting an invoice by the mail, but I want the physical invoice from the contractor, so I have that little bit of extra control. And you walk out to the truck, yeah, I got it right here, and it's a crumpled up receipt that's on the dashboard of the truck. I've seen too many of them where I'm not kidding you, at the end of the month or the end of the week or whatever it is, they'll just take all of those receipts that they've got on the dashboard of their truck, squish it into a little manila folder, and then walk over and go, here's all your stuff, bud. Right.
Yeah.
Sometimes contractors are not exactly the most organized people. So knowing exactly what your budget is and being able to keep yourself on track provides you getting that correct billing information from your contractors. You agree?
Yeah, absolutely. Yeah. I mean, look, we can't put an unrealistic expectation on a relationship. They're contractors. They're rough and tough. They're not organized CPAs, right?
Yeah.
So for us to expect that. So that's where, I create these scenarios to help. Whatever the way I look at it is help them, help guide them in the right direction, right? Don't come to me with a stack of receipts. Say, hey, by the way, I had to buy these things and float them, and I need you to pay me for them. No. I need more transparency and upfront in advance, because then it puts me in a position of like, how do I know that was for my project?
Right.
You're talking these are months old receipts. Like, nah, it's not that way we play this.
Mm-hmm.
So tracking expenses is important. So how do you track your expenses then?
Yeah, great question. So a couple of different software programs that I use for that. We track all of our construction expenses, big and small. We use, I've said it, I say it again, QuickBooks Online, and we use this other process called 𝗥𝗲. Now, 𝗥𝗥, I can drop receipts in there that goes directly to my bookkeeper. There are a couple of different ways I can do it. Number one, I can use the app. I can scan the receipt. This is great for when you're doing meals and entertainment, maybe private money lending. You're trying to raise capital for your next deal, and you take someone out to a dinner and maybe a Flyers game or something like that. Sorry, guys, it's not real good right now, but they'll get better when they make a trade and probably fire the general manager. Anyway, sorry, back off the sidetrack. Here we go. You take that person out, you buy them whatever, you're trying to raise that capital, give them that presentation. You take a snapshot of the bill that you just paid and you categorize it as meals and entertainment, and that's it. You close the app, and then your bookkeeper annotates it, puts it into your QuickBooks, and you're good to go, right?
Now could you drop that into the comments there? What is that? 𝗥𝗲, DEXT?
Absolutely. Yeah.
Okay.
I'll do that right
now.
Now
Is that integrated with QuickBooks for you?
It does. Yeah. Now the way that works, because I use Beyond Your Books. My bookkeeper does that, scans it, checks it. If she's got any questions, I get an email. Right. But for the most part, 𝗥𝗲.com. All right, great. So now that works very well with us. The other way that we can do it is, and this happens a lot, right? You get these invoices that come back, the receipts that come back from Lowe's, Home Depot, box store, small, whatever, Ace Hardware or whoever you're using. They'll send you an emailed receipt. You just drag it, drop it into the online portal. Boom, done. Bookkeeper takes care of it. All you've got to type in there is 33 bond or 49, whatever, right? Whatever that address is, and then it's associated. Okay. So the last way is and this one's great, man, because if I'm working from my phone, say like, I don't know, in the southern island of Greece, right? We're in Mykonos and I don't have very good Wi-Fi. I can't drag and drop it into a system. The Wi-Fi is not that good, but I can hit forward and then type in my key email address at, 𝗥𝗲.com. And done, and it'll send it, right? And then the bookkeeper gets the email through 𝗥𝗲, and it's already scanned and accounted for in the system. It's beautiful, right? Now you can do similar things with QuickBooks Online by yourself, where you can scan the receipt and then you have to go in and actually type out the account. information, right? Whatever account that it's going into. When I'm saying account, I'm not talking about a bank account. I'm talking about the line
Chart
item
of account.
accounting, the chart of account in QuickBooks Online. Yeah. Right. Just wanted to be, So, and man, you got to be really diligent about this stuff, right? Because again, we're talking about accounting and how to save your money. You really want to make sure that you're on top of this stuff. I look at my stuff 30 minutes every day. Right? It's very simple. Yeah. So Kathleen, absolutely. I'm not saying don't keep copies of your invoices, right? And drop them into, and keep track of them that way. You can use something as simple as a Google Drive and, what do you call it? A spreadsheet, right? And track your expenses that way, have them all added up and keep track, have a running tally. If that's what it takes and you're just starting out and you don't want to pay for a bookkeeping service and you don't want to pay the guys, there's a, I can't say that I can get you the QBO introduction fee, but eventually I'll be able to bring that to the table. We'll be able to provide that to you guys as a little added incentive to jump in there, but it's like $39 to start. And then it goes to like, I think $79 for the business level. Don't quote me on those numbers. I apologize if I'm wrong, but it's something like that, right? There's a starter and then it jumps up a little bit later on, but so you can track your expenses. There's a number of different ways to do it. We're just kind of giving you tips and tricks right now. But I touch every company every day. And it usually takes me about 30 minutes to go through all 8 of them. And just to make sure that all of the income is accounted for, all of the receipts are submitted, all the invoices are done, and we go that way. But
so why don't, just to clarify a little bit, I mean, for myself, and I'm sure maybe the audience may have some questions too, is that there's 2 different versions of how we run projects, right? Whether I'm wearing the GC hat or I hire a person that's wearing the GC hat too, right? So your scenario, it sounds to me like it's more about you're wearing the GC hat, right? So you can get a lot of these one-off transactions going on that you need to keep wrangled in together, right?
Yeah.
Am I correct?
Well, the way that, so here's the way that we have it. And Phil, similar to what you were saying at the beginning of the call, where it was, you have your guy going into Home Depot, making a purchase, you're getting the phone call, you're dropping the credit card information. Same thing. We have it set up the same way. When those so the contractor, if he doesn't give me an invoice, I still want him to give me the invoice anyway. But generally, I'll get Home Depot or Lowe's or whoever.
Right. I get an emailed receipt.
And we'll get that email receipt. Yeah. So whether I'm the GC or I'm just the project manager or I'm just tracking the expenses, same thing. We run it exactly the same way.
I almost feel like sharing my screen to show you guys. That's where I live and breathe too. Like, HomeDepot.com I'm referring to, my Pro Extra account, it tracks all of my purchases, so I can audit stuff very easily. I'm a proponent of like, keep things simple, right? Where like, and what I mean is this, like, I hear a lot of people talk about, well, I can go on Amazon, I can find this for cheap, or I can go to this store over here and find this for cheap. And you're saving a couple dollars here and there, but you're creating more ability for these expenses to slip through the cracks on you to not have a grasp on how much you're spending on your projects too. For me, it's very simple. Keep the process simple is worth the couple of dollars I might spend extra. But mind you, I told you earlier, everybody, you have a Home Depot account, you get a 1% kickback. I spend $120,000 a year in materials on average, and I get $1,200 back in the summertime. It's a great bonus check, so I'm making it up in a ways later on. And then there's, different tiers of discounts. There's Pro Extra dollars they'll give me back. So there's all this incentive to keep 95% of my material purchasing through them. I might not get my paint there, but Sherwin-Williams, but I'm telling you right now, I don't shop at like Ace or True Value for one reason. I can't track my expenses online.
Yeah.
I hate it. I'm not a paper receipt guy. Paper receipts, they fade. You can't save them for the IRS for 10 years down the road anyway. So don't even try unless you take a picture, right? Like you're saying there. So, when I'm looking at what vendors I use, it's usually predicated on one of the boxes that needs to be checked is online tracking capabilities. I need to have that because my bookkeeper, I've created the system where I can fortunately afford a bookkeeper. She has the logins to access that stuff. Yet again, streamline. I'm not getting bogged down with all the minutiae details of tracking, but she has access to my QuickBooks and all these different accounts to be able to chart or account that stuff so that I can, on my free time, go into one website, QuickBooks Online, and see where I'm at with my expenses, So for sure.
Yeah, man. Great stuff, Phil. Guys, before we wrap up, let's just go do a quick recap of the benefits. Hopefully you guys were able to grab some some nuggets of wisdom today. Okay, Phil, we got a statement here in the chat. We're in our first flip and our GC bid was inclusive of materials and labor except finishes. Purchased all finishes, including flooring, so I was able to manage that. GC is awesome, great communication, great as problem solving, and concerned. Yeah, man. Awesome. So
you mentioned cost plus. What are the thoughts and what does that look like for an investor?
Yeah, I'll let you take that one, Phil. Cost plus. It's not something that I generally do.
No, because it's leaving an open-ended loose end.
Yeah. Yeah.
You need to predefine these things. Just have a good change order process. This is Kathleen. Hey, what's up, Kathleen?
Yeah.
One of my students I'm super proud of. Ground up, crushing it. I love it. Active on social media, everyone. Follow this lady and her husband. They're crushing it. So yeah, I just don't want to, I don't like it keeping like a crack in the door, you know? It's kind of like the way I look at it. I want to be able to control those outcomes as best as possible. You know, I do want to give freedom within the project for my contractor to work with them, but it's this set of parameters around that where it's like I can't be hit with surprises. You know, these surprises don't work well for me. So, you know, we need to be diligent on the front end and try to discuss as many of these things in advance. You know, so we don't have a cost plus scenario. You know, like let's talk about like so. And I did put on there, but if you notice, you know, when after we're done wrapping up right here, we'll answer this one question. But if anybody has any questions, I'll stick on for a few minutes. And Bud, if you can, great. We'd love to interact with you guys. We can answer some questions. It'd be awesome. You know, but what I was gonna say is that you know, with your scope of work and building that out, you know, you need to be diligent with that, and then having a candid conversation, right? I have pre-construction meetings, minimum one, usually multiple, right? And what I mean is I'm trying to help the contractor think in advance of scenarios that can come up. And here's what I'm talking about. A cost plus is most likely out there for you right now because of the way your cash flow is being presented to him on the project. And he doesn't know if the inflation of the materials is going to hit him mid-project. So he's going to protect himself and change order you if it does. The way to prevent that is to talk about that in advance, you know, to say, hey, you know, how can I make sure that you're not affected by inflation? I know it's the elephant in the room right now. Let's just talk about it, right? So on the front end, on your deposit payment, right, we have all these areas highlighted with special order items or materials that need to be purchased. Do you want to pre-order them, you know, in maybe 3 different chunks throughout the project? Let's see how I can accommodate your payment schedule to help you get there, you know, things like that. So,
yeah, it's always about relationships and discussions, isn't it?
Yeah, it's about being proactive. The contractors are not thinking that level. Like you're an entrepreneur for a reason, right?
Yeah.
We are entrepreneurs for a reason because we think at higher levels. So we can't just be negligent in thinking that all the other people we associate with are going to have this high level thinking. I'm not trying to talk down on people right now. I'm just trying to talk, you know, plainly and obviously of what I've experienced is that help them get to that level of thinking, help guide them. That's why they're associating themselves with you is because you are that high level. They want to conduct business with you because they're attracted to that through the law of attractions, right? So spend the time with them and be diligent and share your mindsets and your thinking and your proactive nature so that you are both set up for success. All right.
Yeah. And guys, all of this, the benefits that it's going to provide you is you're going to have insight on all of your expenses. It'll help you save money in the long run. And then you will not have surprises as you continue on, right? And you can pass those. If there's a surprise on a build and you get stuck, you're going to wind up trying to pass that on to somebody else. And a lot of times in this industry, you just can't. You just take it on the chin. You're not going to be able to, you know, to deal with, you can't just go out there and go, oh, we're just going to add $5,000 to the sale price.
Yeah, raise some more capital. Yeah,
work,
or whatever.
Right?
Yeah.
Yeah, exactly. So
to recap, right? We went over construction project accounting, right? The importance of keeping funds separate and not commingled, tracking them individually, fixed pricing on your contracts so you're not left with an open book, checkbook type of feel, right? With your contractors. Then we went into your profit first, right? Bud is the guru on the profit first. You got questions, hit him up directly. I'm a growing work in progress with that. I'm still trying to break old habits. But yeah, you know, and then we went into tracking expenses. So if you were to say 3 bullet points, then besides those 3 topics there, but how does this help our community here going forward to save money? Right? We came on talking about money, right? So if we could think of 3 key points of, what this does for them, what would you say?
Keeps your costs down. helps you make money at the back end. But more importantly, it gives you performance indicators that you can track. Okay. As you're going on. So for example, when you're tracking all of this stuff and you're looking at all these items, line items and whatnot, and you're going contractor to contractor to contractor, build after build after build, you can look at your performance indications, right? Whether it's how many dollars per square foot does it take to flip a house in condition A? How many dollars per square foot? And I can tell you this, after 100 doors, I can tell you this, that I can walk into a property and basically put it into one of 4 categories. I can say 15 bucks a square foot, 25 bucks a square foot, 65 bucks a square foot, 85 bucks a square foot. Okay. First one is we're going to walk in there. We're going to do some basic lipstick. We're going to do check the major 6 things, the roof, the windows, the foundation, the plumbing, the electric, the HVAC. We're going to tune some stuff up and we're going to paint. Okay. It's going to cost you about 15 bucks a square foot on your quick rehab, maybe some flooring. 25 bucks a square foot. You're giving the kitchen a little bit of an upgrade. Maybe you're reglazing the bathrooms, definitely putting down LVP and a couple of other little touch-ups. You start getting into 65 bucks a square foot. Now you're tearing stuff out, putting in a new kitchen, putting in a new bathroom. 85 bucks a square foot or higher. You're pulling down to the studs, checking the electrical systems, maybe pulling out, God, Jersey, knob and tube, get out of my life, please. I hate you, right? Or replumbing because you have iron pipes, or you have a sewer pipe that's all iron and terracotta, right? Because, hey, that's what we work with here. Basements, making sure there's no water coming in, or buried oil tanks. Gotta love it, right? They're all the things that are going to push you into that $85 per square foot marker. But you get to that point and it gives you that experience so you can walk in and do a rehab estimate in 15 to 20 minutes. I did one yesterday in Browns Mills. We walked through it and I was like $17,500. He's like, what? I'm like, because I had, one of my students with me, and I'm like, $17,500. And he's like, how'd you come up with that? I'm like, well, 1,062 square feet. We're talking about $15 per square feet plus contingency. We're at 17,000.
Yeah.
So, and it gives you that opportunity because you know those key performance indicators right off the bat. You can also track your contractor's performance over the course of time. How much did they say they were going to do the job for? How much did they actually do the job for? 2-3 jobs later, are they to the good, to the bad? I give them a ranking 1 to 10. Guys above 8, they still work with me. Guys below 8, not so much, right?
Yeah.
Maybe 1 or 2 jobs, and thanks a lot for playing.
So it sounds to me like the biggest value takeaway is, maybe mid-project with all the stuff we shared to you guys today, that you're able to make an adjustment that could save you a couple dollars. But I think the biggest value is how you apply yourself going forward, right? Because now you have data that is accurate that you can work with. Like, I love the price per square foot model. I tell everybody that's the ultimate goal to get to, right? To be super efficient, because also what we're doing is we're setting ourselves up to save time in the future, and time is money. We all know that, right? So the application of how you take this information and go forward. So I really wanted to just hone in on at the very end here of a big takeaway. And I'm glad you brought that up, is that don't get discouraged if you notice some discrepancies or inefficiencies in your company while you're doing this. As you start implementing these things we shared with you, know the value in the long run. Okay. It just, don't let it discourage you and stop you from doing it. Push through it, collect the information, then apply it going forward on your future projects, and you will make more money.
Absolutely.
Yeah.
Phil, I really appreciate it. Guys, I've got to run down to Trenton. I've got 2 walkthroughs I'm going to be doing today. Hopefully you guys took a little bit of something out of this. So for Phil Tudor from South Jersey, Ryan, my name is Bud Evans from the Aim High podcast. We thank you very much. Hope you got something out of it. Until next time we meet, aim high.
Yes. Talk to y'all later. Have a great day.